morning, traders. Welcome to the TMT stock market strategy video for Wednesday, August 24th. All right, so we did get a little bit of a pop for no reason at all. Markets just popped up and then kind of faded. Very light volume to the downside. So sellers were a little bit in control. But again, guys, we really need some evidence that the markets are actually moving in one way or the other. I mean, we just continue to grind higher. I'm going to show you a few things, and look, the evidence is there for a market pullback. It's just a matter of when, and price has got to tell us what's going to happen. So we don't want to anticipate. We don't want to just be ready to go. And like I said, if you're day trading, you're frustrated because markets are actually in very tight ranges since July, right, coming off the Brexit vote, and there's either gap ups and then market stays where pretty much the opening gap is the gain or the loss for the day with very little movement. And reason why, let's get right to it. VIX volatility is extremely contracted. We do have positive divergence, and I mentioned that to you, and I've showed it to you many times in the videos. You could see here we have positive divergence forming CCI. You have RSI. But we're just not going anywhere. Bollinger Bands are extremely tight. We just have to wait for that breakout or the breakdown and then the break back up into the bands, which will produce a buy signal. But very quiet. I mean, very quiet. It's so quiet that we are in 2-year lows of average true ranges dropping below 14 and 13. You could see here 2-year lows, and we haven't gone anywhere. We're stuck at these upper end of the ranges. Now we did. As you can see here, we broke up from the Brexit vote. We went sideways. We had a little bit of a blip, popped up on the non-farm payroll in August, and we've been sideways ever since. Really difficult to do any type of trading when you have no volatility, and you could see that here. Okay, now let's take a look at the advanced decline with volume, NYUD. You could see that clearly we're making lower lows and lower highs as the markets are holding in at the upper end of the ranges. Would I say it's bullish? Sure, it's always bullish when you're holding these ranges, but look what happens when you really start to break down at these levels here. So I do think that we're very close to a market pullback, a market correction. I'm not sure. We'll have to take it one step at a time, but no question a market pullback at the very least. And here you go. Here you have your McClellan oscillator, your NAMO for the NASDAQ. It really is the same, reading very close to the McClellan oscillator. We're neutral. We're in a neutral state in the markets, but look what's happening. Bollinger Bands are pinching. So if it does break down, it has plenty of room to break down before it becomes oversold, and the same thing before it comes overbought. So I just wanted to show you some of the internals here. Now let's take a look at gold. We did have higher highs and higher lows. 1300 is going to be key. 1304 for the first pullback. We did hit that 50-day moving average. So if we lose 1300, I'd be looking for anywhere between 1265 and 1280 for your next downside target. Okay, that is the bigger picture in gold. Our premium members, we have our profit taking and of course our levels in an intraday chart. So when you do trade gold, you'll have these actionable areas. Aside from these big key areas that I'm showing you now, our subscribers have many levels of areas to short and to buy off of, and also of course take profits. Here's your stochastics. I'm sorry, your MACD. Apologize. Here's your Stokes. Here you can see here lower lows and lower highs. So not really bullish at this moment. We are looking for a little bit of a pullback. But remember, guys, when the market does pull back, I think that we're going to run right into gold again. Gold is setting up to be a really explosive trader. I do believe gold's in a second stage of a bull market, and I think you see 1314 get taken out very easily on the next pullback. So the pullback is good because it'll reset all of the oscillators and get everybody now looking to get short, and that's going to also fuel some upside breakouts. Here's the GLD, and you can see that I've showed that to you on a double bottom. I'm really looking for the 120.49, 120.50. We're stuck on that 23%. So the next target is going to be 125.50, and then of course that 50%, 61.8%, and then here. So these are some of your levels. Again, these are the daily charts. You can see these key levels that a lot of our premier members are using. Now this is off the daily, but we give you some really good levels on the short-term time frame to trade off of. Right, lower lows and lower highs. You can see that clearly here. So not right now a very bullish prospect. So I look to see lower lows. I look to see some further downside probing, before it starts to move back up again. Silver hit our first target of 38% retracement. Now I'm looking for that 50% coming off that double top. You could see that here's a 50. Ultimately, this is where I'm looking to start. It's going to entice me to buy silver. 61.8% comes in around 1680. And you can see here we're making lower lows and lower highs. So another break lower. But the problem with the ETFs, as you can see, there are tremendous gaps because the silver trades overnight very, very hard. You either have to be in it in the previous night and could be wrong for 60 70 cents. So that's something that's a very difficult trader. I don't like to show it too much, but once we're covering the metals, I definitely need to show you that. Here's the GDX, and this is something that's a little bit easier to trade. I'm looking at that print here, guys. It looks like we're going to get to it. That's going to be that $28 handle right there, which is going to be close to that 27.50, 28 handle right in this area. And then again, the 61.8% will be the bigger target area where we will look to reset and possibly look to buy the GDX. Okay, let's go right into the indexes. We were on a fifth wave. Well, there's a little shooting star here, you can see, which is a bearish candle. And then we're looking for our fifth wave completion. You can see here, got 1, 2, 3, 4, 5, and we should see some downside movement. Where do we go? Well, I mentioned this to you before. Of course, that 23% should get there quickly, but the ultimate pullback target would be 210. And I say pullback because why? Well, if this market does break below 210 on volume, then I can see we could be in a full-blown correction. At this time, I'm just looking at some pullback levels. IWM doing really, really well here. Did take out, made new highs. So this is something that will help equities if the IWM continues to move higher. Okay, transports, same thing. Above the line, we did get a gravestone doji. You could see the transports are very, very weak, but it's not selling off. If it's not selling off, but it's just not caught up to the other three indexes, I think obviously it looks like it's fine. As long as the fund managers keep that IYT, or of course the Dow Jones Transports up above the 200, I think they're going to be okay with that. So we still need to monitor what's going on with them. Last is going to be the Qs, guys. You can see that right here. The first break is going to be 116.30. That needs to break, and then we get right to that proprietary price channels. Right? I hope it helps, guys. I hope you're doing well. And if you're not trading, it's okay. It's to be expected. Don't trade. Don't overtrade. Trade one or two little days in and out, and then let's wait for the volatility to come back. There'll be plenty of opportunity to make up some trades that we didn't do, obviously in the course of August and July if you're day trading. So it's not a big deal. Let it come to you. It's going to be easy instead of fighting the trend. Okay. Have a great day, guys. We'll see you tomorrow.